Welcome back to the channel. We're tracking the latest developments surrounding the Iraqi dinar and the broader economic landscape in Iraq. If you've been following the currency markets, you know there's no shortage of moving parts right now. From official central bank policy to parallel market dynamics, from oil revenue volatility to the ongoing political uncertainty surrounding the federal budget. And as always, we're here to break it all down in a calm, analytical way, looking at the facts as they stand and what they might mean going forward. Let's start with the most immediate question on many viewers' minds. Where does the Iraqi dinar stand against the US dollar right now? As of early July 2026, the USD/IQD exchange rate on the official interbank market stood at approximately 1,311.18, which represents a modest increase of about 0.09% from the previous session. Over the past month, the dinar has weakened by roughly the same margin, and over the last 12 months, it's down about 0.09% as well. That's a remarkably stable trend at the official level, but as we'll discuss in a moment, the story is very different when you look at the parallel market. Trading economics models suggest that the dinar is expected to trade around 1,310.02 by the end of the current quarter, with a similar projection for 12 months out. So, from a purely official exchange rate perspective, the dinar has been remarkably steady, but that official rate doesn't tell the whole story. Now, let's talk about the parallel market, because that's where the real action has been. Across major trading hubs in Iraq, Baghdad, Erbil, Basra, the parallel market rate for the US dollar has been trading at a significant premium to the official central bank rate. In late June, the parallel market was hovering around 157,000 to 157,500 Iraqi dinar per 100 US dollars. That's a massive gap compared to the official central bank rate of 130,000 dinar per $100, which has been in place since February 2023. In Baghdad's Al-Kifa and Al-Harithia bourses, the selling rate was recorded at 157,500 dinar per $100, with a buying rate at 157,000. In Erbil, the selling rate was 157,000 and the buying rate 156,000. And in Basra, the selling rate was also 157,000, with buying at 156,500. So across the board, we're seeing a parallel market premium of roughly 20 to 21% above the official rate. That's a substantial spread, and it reflects persistent demand for physical US dollars in the local economy. What's driving that premium? Several factors, according to analysts. First, there's the issue of dollar liquidity. Currency traders in Erbil have reported that the central bank's pace of dollar sales has been struggling to keep up with demand, leading to a physical shortage of the currency in some markets. That scarcity, in turn, has fueled speculative behavior. There have been persistent rumors circulating in the bazaars that the central bank intends to raise the official exchange rate to 142,000 dinar per $100, a move that would effectively codify a devaluation of the national currency. Now, it's important to note that Iraqi government officials have categorically denied these rumors. Mazar Mohammad Saleh, a senior economic advisor to Prime Minister Ali al-Zaidi, has stated publicly that the government has no plans to raise the value of the dollar and has characterized reports of an impending hike as baseless. But in a heavily dollarized economy like Iraq's, rumors can become self-fulfilling prophecies. Traders who anticipate a more expensive dollar tomorrow tend to hoard their current holdings today, which strangles supply and drives prices up in a classic speculative loop. The Central Bank of Iraq, for its part, has been taking steps to address these dynamics and strengthen the country's financial infrastructure. One of the most significant recent developments came in late June, when the CBI announced that it had completed the procedures and requirements necessary for the reintegration of several banks that had previously been restricted from conducting foreign currency transactions in US dollars. This is a meaningful move, according to the CBI, as it forms part of broader efforts to strengthen monetary and financial stability, modernize the banking sector, and deepen Iraq's integration into the global financial system. The affected banks have met the requirements of the reform plan, complied with relevant regulatory and technical standards, and strengthened their anti-money laundering and counterterrorism financing frameworks. As a result, the reintegration process has entered its final stages, paving the way for a gradual and orderly return to dollar-denominated foreign currency transactions. This is expected to enhance the bank's ability to serve customers and support the expansion of correspondent banking relationships with international financial institutions. The CBI has also been advancing its efforts to establish comprehensive domestic liquidity management within a pegged exchange rate framework. International financial institutions have been assessing the CBI's current practices and outcomes of its liquidity absorption measures, with recommendations for implementing an interest rate corridor. The bank has also completed technical and procedural preparations to increase spending limits on electronic payment cards used by registered companies and businesses. This is expected to expand digital financial services, promote financial inclusion, and better meet the needs of users of electronic payment systems. These measures are part of a wider reform agenda aimed at addressing key challenges, strengthening confidence in Iraq's banking sector, and reinforcing financial and monetary stability. The CBI has reaffirmed its commitment to meeting demand for U.S. dollars, stating that it will continue to provide foreign currency in accordance with approved regulations and standards, ensuring the smooth processing of transfers and the fulfillment of legitimate public and private sector needs. Now, let's turn to the broader economic context, because that's where some of the most significant challenges lie. Iraq's economy is facing substantial headwinds in 2026, and much of that stems from the country's heavy dependence on oil revenue. The recent conflict in the region and the associated disruptions to maritime traffic in the Strait of Hormuz have dealt a serious blow to Iraq's export capacity. To put this in perspective, Iraqi oil exports dropped to 18.6 million barrels in March, generating about $1.96 billion in revenue. Compare that to February, when exports exceeded 99 million barrels and generated $6.81 billion. That's a dramatic decline, and it has created a massive fiscal gap. According to financial advisor Mazar Mohammed Salih, Iraq is facing a financial gap estimated at $9.5 billion per month as a result of the decline in oil exports. Monthly revenues have fallen to roughly 4 trillion dinar, over $3 billion, against monthly obligations exceeding 8 trillion dinar, or over $6.1 billion. That's a significant shortfall, and it has forced the government to consider both internal and external borrowing. The situation has been further complicated by the ongoing uncertainty surrounding Iraq's federal budget for 2026. As of mid-2026, Iraq still does not have an approved federal budget law for the fiscal year. The country entered 2026 operating under what's known as the 1/12th rule, which is a mechanism prescribed by the financial management law that allows the government to spend 1/12th of the previous year's budget each month. This ensures that essential state functions and public sector salaries continue to be funded, but it's not a sustainable long-term solution. According to Kurdish lawmaker Jamal Kochar, a member of the Finance Committee in the Iraqi parliament, there are 3 potential fiscal paths for the remainder of 2026. The first possibility involves the drafting and approval of a short-term budget designed specifically to cover expenditures for the final 5 to 6 months of the year. The second scenario envisions the passage of emergency spending legislation, similar to the deficit financing law utilized during previous periods of fiscal constraint. The third possibility is that no new budget law is passed at all, and the government continues to operate exclusively under the 1/12th rule. Kochar has indicated that he anticipates Parliament will likely pursue a mechanism closer to the first 2 options, rather than attempting to pass a full annual budget at this late stage. The delay in passing the 2026 budget is directly tied to the prolonged government formation process in Baghdad. The political transition remains incomplete following recent parliamentary sessions, and this has created significant uncertainty around fiscal policy. Some lawmakers have suggested that prospects for passing a comprehensive budget law this year remain slim, with more than 6 months of the fiscal year already elapsed. There's even been speculation that the next federal budget approval may not take place until 2027. But despite these delays, there have been assurances that civil servant salaries will not be affected. The 1/12th spending system provides an institutional safeguard against payroll disruption, allowing the Ministry of Finance to disburse funds equivalent to 1/12th of the previous year's budget each month. This ensures that operational expenditures, including payrolls, remain fully funded even in the absence of new legislation. The economic outlook, according to major international financial institutions, is challenging. The World Bank's Global Economic Prospects Report, released in June 2026, projects that the Iraqi economy will contract by 2.2% in 2026, with an even sharper decline of 8.9% projected for 2027. This follows a contraction of 1.5% in 2025, after a modest growth of 0.5% in 2024. The IMF's April 2026 World Economic Outlook similarly projects a contraction of 6.8% in real GDP for 2026, which would be the steepest contraction in recent years. According to the IMF, Iraq is one of the economies most affected by regional turmoil, with major consequences for inflation rates and state budgets. The country's vulnerability stems from its heavy reliance on oil exports and the disruption to trade routes, particularly those that cross the Strait of Hormuz. Iraq is among a small group of nations facing increased challenges due to the interruption of commercial movement and high costs of transportation, as well as the impact of military confrontations on trade exchange routes. In response to these challenges, Iraq has been in discussions with the International Monetary Fund and the World Bank regarding potential financial assistance. An Iraqi official advising on financial policy has confirmed that the country is in preliminary discussions with both institutions over a loan to finance the budget, given the sharp revenue shortfall caused by halted oil exports. Iraq's last financial deal with the IMF was a $3.8 billion standby arrangement that expired in July 2019, of which $1.49 billion was drawn. Any new arrangement would likely come with strict reform conditions, which could include measures to maximize non-oil revenues through automated taxation, reducing the informal economy, and tightening border customs. These are seen by some analysts as strategic long-term solutions that could help shield the country from future geopolitical shocks. This video is for informational and educational purposes only. It is not financial advice. We're here to provide context and analysis, not to make predictions or recommendations about any specific investment decisions. Always do your own research and consult with qualified professionals before making any financial choices. Now, let's talk about oil, because that remains the lifeblood of the Iraqi economy. Despite the recent disruptions, Iraq still possesses some of the world's largest proven petroleum reserves. The country's southern oil fields have continued to produce, with reports indicating that Basra's exports alone reached 3.2 million barrels per day in January. However, the geopolitical environment remains highly uncertain. The Strait of Hormuz, through which a significant portion of global oil supplies pass, has been subject to restrictions and counter-restrictions between the United States and Iran. While there have been some signs of stabilization, including a widening of the Hormuz transit corridor in late June, the situation remains fluid. Analysts suggest that any sustained improvement in Iraq's oil export capacity would be a positive factor for the dinar, as it would help rebuild foreign currency reserves and reduce the fiscal gap. Iraq's total foreign currency reserves stand at approximately $97.6 billion through February 2026, according to available data. That's a substantial war chest, and it gives the central bank significant capacity to defend the currency and manage liquidity. However, only a portion of those reserves are held in liquid form in New York, with the bulk presumably held in other forms or with other counterparties. There's been considerable discussion among analysts about the potential for an Iraqi dinar revaluation. Some market observers have pointed to Iraq's large foreign currency reserves, ongoing banking reforms, and efforts to diversify the economy as building blocks for a potential appreciation of the currency. The central bank's reform program, which includes the reintegration of previously restricted banks, the expansion of electronic payment systems, and the implementation of international best practices in banking supervision, is seen by some as creating a more stable and transparent financial environment. However, it's important to approach this topic with a clear-eyed understanding of the current realities. The official exchange rate of 1,300 dinar per dollar has been in place since February 2023, and the central bank has given no indication that it plans to change that rate in the near term. In fact, the CBI has formally communicated to the Ministry of Finance that the official exchange rate to be applied in the 2026 budget stands at 1,300 dinar per dollar. While there is a mechanism in place where the central bank purchases dollars from the Ministry of Finance at 1,300 dinar, sells to banks at 1,310, and banks offer to traders and for external transfers at 1,320, the core official rate remains unchanged. There are also important structural factors to consider. The Iraqi economy remains heavily dependent on oil, and oil revenues continue to be the primary source of foreign currency. Until there is meaningful diversification away from oil, and until the geopolitical environment becomes more stable, any sustained appreciation of the dinar would face significant headwinds. The IMF's projection of a 6.8% contraction in GDP for 2026 underscores the severity of the current economic challenges. A contracting economy is not typically the environment in which a currency appreciates significantly. Moreover, the parallel market premium, which remains around 20% above the official rate, suggests that market participants are pricing in significant risks. That premium has been persistent despite aggressive interventions and consistent currency injections by the CBI through its automated electronic trade financing platform. This suggests that the underlying demand for dollars in the Iraqi economy is structural and not easily addressed through short-term measures. That said, there are some positive developments worth noting. The CBI's efforts to modernize the banking sector, improve anti-money laundering and counterterrorism financing frameworks, and expand digital financial services are all steps in the right direction. The reintegration of banks that had been restricted from dollar transactions is a meaningful improvement that should enhance the efficiency of the financial system. The move to end cash payments in government institutions by mid-2026, as previously announced, represents a significant shift toward a more modern financial infrastructure. And the Solar Energy Financing Initiative, with its capped interest rate of 2.5%, reflects efforts to encourage sustainable investment and reduce the country's carbon footprint. These are not immediate game changers for the currency, but they are part of a longer-term transformation that could strengthen Iraq's economic fundamentals over time. Another factor to watch is the political situation. The completion of the cabinet formation process would be a significant step toward restoring policy certainty. A fully formed government with a clear mandate would be better positioned to address the budget impasse, negotiate with international financial institutions, and implement structural reforms. There have been reports that Parliament is set to vote on completing the cabinet after the legislative recess, which could provide some clarity. However, the political landscape in Iraq remains fragmented, and the path to a stable government is not always straightforward. Investors and currency watchers will be paying close attention to developments in Baghdad. So, what does all of this mean for the Iraqi dinar? Well, there's no simple answer. The official rate remains stable at 1,300 dinar per dollar, and the central bank has shown no inclination to change that. The parallel market, however, tells a different story, with the dinar trading at a significant discount to the official rate. The gap between the official and parallel rates reflects a combination of factors: dollar scarcity, speculative behavior, geopolitical uncertainty, and structural weaknesses in the economy. Until those underlying issues are addressed, the parallel market premium is likely to persist. In the longer term, the trajectory of the dinar will depend on Iraq's ability to stabilize its oil revenues, diversify its economy, implement structural reforms, and navigate the challenging geopolitical environment. The country's substantial foreign currency reserves provide a buffer, but they are not limitless, and the current pace of depletion is a concern for some analysts. This video is for informational and educational purposes only. It is not financial advice. We encourage you to do your own research, verify information from multiple sources, and consult with qualified financial professionals before making any decisions. The situation in Iraq is complex and evolving, and while we strive to provide accurate and timely information, we cannot guarantee that every detail is complete or up to date. As we look ahead, there are several key indicators to watch. First, the progress of the budget process in Parliament. Any movement toward a temporary budget or emergency financing law would be a positive sign for fiscal stability. Second, developments in the Strait of Hormuz and the broader geopolitical environment. Any sustained improvement in oil export capacity would help rebuild revenues and ease the fiscal pressure. Third, The central bank's ongoing reform efforts, particularly the implementation of the interest rate corridor and the expansion of electronic payment systems, could enhance monetary policy effectiveness over time. Fourth, the parallel market exchange rate. A narrowing of the gap between the official and parallel rates would suggest improving confidence in the dinar. And finally, any announcements from the central bank regarding exchange rate policy. While officials have denied plans for a devaluation, the situation remains fluid and policy could evolve in response to changing circumstances. For those of you who have been following this channel for a while, you know that we don't do hype or speculation. We look at the facts, we consider the analysis from credible sources, and we try to provide a balanced perspective. The Iraqi dinar is a complex currency in a complex country, and there are no easy answers. But by staying informed and understanding the underlying dynamics, you can make more educated decisions about how to navigate this landscape. If you found this update helpful, please consider subscribing to the channel. We're committed to bringing you regular, factual, and balanced coverage of the Iraqi dinar and the broader economic developments in Iraq. There's a lot happening, and we'll be here to help you make sense of it. Thanks for watching, and we'll see you in the next update.